Ah, damn it. I'm gonna rotate this around so I can actually see the mute button. Sorry about that. So I was mentioning Nasdaq doing pretty good, and I was mentioning Melly Cabra and Beyond Meat on earnings with a nice gap up this morning. So that's pretty good. Lots of decent gap up. We'll see how many are down on our global watch list. Not too many. Biogen ANET. What's ANET down? Earnings? Earnings. Disney. Hmm. Morning, Rob. Yeah, really not much downside options here at all. All right, point 0.9 for the Nasdaq, getting towards yesterday's highs already. The end of the day yesterday ended up with quite an aggressive sell-off in a lot of stocks. Fed, it, Rob, it doesn't really matter who's buying, why buying, when buying. It doesn't really matter. It's just about price and volume action. And even if it is Fed buying, what are you going to do about it? Nothing. If it's Ellie buying, what are you going to do about it? Nothing. So it just doesn't matter. Just because you don't want to buy doesn't mean someone else ain't buying. It's pretty much the gist of the situation. You gonna cheer them on? All right, global watch list or I'm sorry, actionable list. Only a few reds. INMD down. Green ran up there at highs. Gold's holding pretty well. So I think I hear my kids, but there's not very well. San ESNT still down here. Lockheed Martin still in a bullish-ish pattern. And we've exceeded the highs from yesterday, it looks like, on the NASDAQ. At least close. 90.20 and 90.20. Yeah, so we have exceeded yesterday's highs. Let's see if we hold. I mean, so far we've been okay. Tesla looks like it's flirting with maybe a percent gain, but so far pretty solid. Seen a lot more up than down. Space up 6% today. They had earnings, 19 cents a share. Restoration Hardware's up 2%. Square, our buddy IVR just bounced around up 2%. So yesterday we saw things kind of rally in the morning and peter off in the afternoon. We'll see if that's a thing or if that is not a thing going forward here. Match.com. Not bad. Getting pretty low volume in this handle. This could be a spark for Match.com actually. Earnings, little gap up. Could see an extension from here. Not over our technical buy point would be up here at about 92.50. Our buddy ZYXI. How'd that handle yesterday? Ooh, not very well. Pulled back, gave up all the gains from yesterday. Docu, where's Carvana? I was looking for DocuSign. Carvana's not too bad here. Oh, I do want to say one thing. Actually, both of these charts have the same thing. Head and shoulders patterns. Very small, but still apparent. With your neckline right there. Obviously, one of the only things that's going to save us is getting back up over that prior high on the NASDAQ. We'll see if that occurs or not. Does look like our Bollinger Bands are narrowing, though. We were super tight over here. Huh. There's still fairly elevated volume, too, up here, which probably accounts for the thing here, the wideness overall the Bollinger Bands. Yeah, Beyond Meat getting a good extension here. Let's take a look here at the intraday. Pretty good volume this morning. All right, Melly looks like it wants to continue higher. We saw yesterday, what was that one stock that was up 40% yesterday? At least when I saw it, I don't know if I looked at it later in the day, but it was up 35 plus percent. All right, AYX, not bad. A little flag here. Also earnings coming up. Earnings season actually so far proving not to be a huge uh, you know, detriment to this upward market so far. 1%, almost 1.1 on the Nasdaq. There you go, 1.1. So far, so good. Just keeps on keeping on. So I can't argue with it too much. Let's go look at our biggies. Amazon looking pretty good here. Still down towards the, even after earnings, down here towards the bottom. They did miss earnings, mind you. Whatever that means. I still don't quite fully understand what that means, but this is what people think you should have made, but you didn't make that. I think it's kind of horseshit, to be honest with you. But it's the weird world that we live in terms of stocks. But we haven't broken down out of that flag at all. I still think this is Amazon, obviously one of the better longer term companies in the market, period. Not too many companies as good as Amazon. Apple, another one of them, doing pretty good, just inching forward every day, which is standard operating procedure for Apple. It bores you into double and triple. I'm not sure about from this level, but still makes way more money than Amazon. So we'll see how that goes. And a 295, it's like a 1% dividend yield. Not too bad. Microsoft still owns the world. And 18183. Okay. Just above this little cup and handle actually. Just above it. So this is still in an actionable position. And we're butting right up against all-time highs. So you wonder where the Nasdaq's up and the some of those other ones aren't? It's because most of these big ones like Microsoft are way up there and have more weighting in the Nasdaq. Microsoft, Apple, Amazon, Facebook's pretty close. Oh, they're trying to come back as well. We haven't really been looking at Facebook, but they take a tremendous amount of ad revenue, as does Google. Who's a little bit farther behind at this stage, but obviously not out supported with the round number 1,000, and we're up here at 1350.62. So big one's good, small one's good. Speaking of small ones, look at the Russell. Russell's been beaten up the past couple of years, hasn't been really performing very well. Most of the money's being sucked up by the mega caps. And I don't know, maybe it's just hard to perform for these smalls. I'm not sure why. Didn't quite get past the highs before this last downturn and came all the way back down to 2015 lows. Wow. See, I don't think the Qs came anywhere close to that. Yeah, here's 2015 lows. We weren't even near the 2015 lows. Right there at 165 versus 96, 95. Not even a snowball's chance in hell. So Russell, drastically underperforming. Put you in a timeout? Was it kicking chats back at you, Rob? I didn't put you in a timeout. I should have. Every day I think about it. Every single day. I think about putting Rob in a timeout, but I haven't done it yet. I always wonder about indexes underperforming like this, if there's some kind of an opportunity. If there is, there's TNA, which is the 3x ETF of the Russell, with a tremendous amount of volume down here. No idea why. QQQ? What's more important, the NQ or QQQ? Oh, okay. Yeah, I did miss that. I kind of saw it, but my brain didn't assimilate. Um, I don't know if one's more important than the other, Rob, to be honest with you. They're kind of two sides of the same coin. In my personal opinion, this is only an opinion and not a very well informed one, to be honest with you, because it's not like I've done a survey or anything. The futures trade almost 24/7, so you get a lot of information in the futures. Also, many more professional traders trade the futures than the QQQ, which is a simple ETF. So I think I just kind of like watching the futures because it has a lot more price information than the Qs. But as far as which is more important, I really don't have a great answer to that. My argument probably would be the QQQ if I had to choose one because of the reasons stated um, a little bit ago. More professional traders, big banks invested in the futures than the Qs by a long shot. And you can see here on the way down the distribution on the futures, and then it just stops once we bottom. I don't know if we have this on the Qs. Not really. So the volume stops here on the low, and then you see it's a low volume situation from there. Not low volume, but volume declines, and then you don't have this bigger swath of volume here. So you can see on this one, there's where the high volume stopped on the Qs. It's not there. This stopped about a week and a half earlier. Not sure why. Um, we can speculate a bunch, but we'll actually never really know why. And the Qs kind of remain. So I don't know. It's kind of hard to tell exactly what is doing what. You could argue this was accumulation by institutions, and I can't argue too much against that. Um, you could say, yeah, I don't know. You could say futures. I don't know. It's weird. Beyond still going 12%. Yep. Q's being at highs over the NQ. No, that was the Russell. That was the Russell 2000. That wasn't the Q's over the NQ. No, no, no. I'm not. Maybe you're driving or something, but um, the Q's and the NQ are like twins. They basically should be twins versus the RUT, which has not been to highs, which is like the neighbor across the street genetically. It doesn't has very little to do with the other. Russell 2000 is the uh, smaller 2000 stocks in the stock market. Netflix. Let's look at Netflix. Whoops. Yeah, Netflix also in a bull flag right here. I've been trying to ban Rob for years. Actually, Netflix here looking pretty good. It's very early, and we don't have high volume. I don't want to say to enter here on Netflix, but we could be getting up to this trend line pretty soon, which could extend Netflix up. Definitely a leader. Definitely a leader. I had a comment that NQ is not at highs, but the QQQ is. Little difference in candles. Oh, you mean on the intraday or something? Yeah, there's going to be a little bit of a difference here. Yeah, Ellie, I've got a theory about that. I'm not sure if it's 100% accurate, but um, hold on a second. Okay, so sell a main, go away. No, no. My general theory, at least on, I'm not sure what you're talking about. I've noticed that volume dries out across the market. I'm not sure. Are you referring that we went from high volume here on the NQ into low volume? Is that what you're referring to, or are you referring to something else? Because I'm gonna go off on a tangent about the wrong thing. Just all the stocks. Well, all the stocks are kind of not just, yeah. Um, well, I think it actually has to do more with the very quick bear market than it has to do with anything else. At least this year, there is sell in Main, go away that has not worked for a long time. Actually, it's been several years since that has not worked. Um, I think that just has to do with the fact that you can work from anywhere and people take vacations in different times of the year now, and also probably the fact that um, there's very few high quality individual traders for institutions right now. I think a lot of institutions probably do have some algorithmic trading desks that can work 24/7 and don't take vacations in the summertime because that's that's where that came from. It came from traders actually physically leaving the markets, not trading, and then going on vacation. But nowadays, it doesn't necessarily have to happen. So I don't think it's really a thing anymore. And that's basically the reason why. But I think usually as we go into uptrends, the volume dries up because your institutions, and this is an interesting example. So obviously there's distribution here on the way down. Well, at some point the institutions stop selling and then start reaccumulating, and they just kind of keep reaccumulating. It's kind of how it goes. That's my theory, at least. Can't back it with science or anything like that, but like I said, it's a theory. Try to find rational explanations for volume is sometimes not very easy. Beyond Meat, 15% almost. Looks like this is a move that's going to keep going so far. Our opening range has not been exceeded. That would be your top of your opening range, 116.29 if you're looking for an entry on this. Wouldn't stop selling part would leave mark on the chart like big candles and gaps. Um, I don't know. I'm not sure why I'm not sure why stopping selling would leave a gap necessarily. And I mean these right here on at least on the NQ, these are all big candles. So you see the theory goes like this, you should see big volume on big candles generally. Because if you have enough momentum to go in a direction, up or down, it doesn't really matter. Yeah, stop selling less resistance up. But it doesn't. You're basically. Let me go to TradingView for this because it's just easier to draw. Um, there it is. Go for it. So at least the theory for me goes like this. So let's say this is selling pressure. So selling pressure goes low, goes high, and then starts to wane off like that, right? And then you end up with buying pressure, which is, usually more elevated than selling pressure generally, right? And then it almost dries up completely inverse, and then kind of slowly starts to come back like this or something. So there's almost melted snowman. Thanks, Rob. You don't like my drawing skills? I appreciate. Actually, I don't like it. It hurts my feeling. Anyway, so I think as the drying pressure sells up, you see a little bit of buying pressure, but it's still very depressed. And then there's basically a lull period until we start going into, a bull market mode. So there's kind of like there's a little area right here. If we take a zero line, which I was trying to get at, but obviously my drawing here isn't perfect, but if you use that as your zero line, they're gonna, the buying's gonna slowly come back and the selling's gonna slowly drift away, is I think, kind of how it works. So you have the extreme selling pressure and then it drops off pretty quickly. If this were more of a flatter curve, I think that would probably do it justice, but dries out pretty quickly and then the buying pressure starts coming back. But I think there is a lull, and that may be that 1 week we saw of sideways action. And in this NQ right here, I think that's probably that little lull area for whatever reason. Obviously, that's an approximation, but I generally think that's kind of how it works in most circumstances. Now, not every circumstance is the same in this circumstance. I think that's how it happened, but you can imagine. Take Brexit for instance. Brexit had a pretty crazy crash and a very immediate reaction. Brexit was like I think Brexit was just a huge shakeout opportunity. Hey, I'm not going to draw this too many more times. Maybe just a Brexit one. But there's different situations. So I think Brexit buying remained fairly steady, and then it actually increased on Brexit. And then what you had, I don't think Brexit buying pressure ever drifted off. Not really. And then I think the bearish pressure just kind of went, they kind of distributed and it dropped off like right immediately after Brexit. Yeah, Brexit. Yeah, it was billed as the end of the world. But this is how the institutions, I think, traded. They did sell off some positions because the market did take a very, very quick and harsh reaction. Um, at least prior, kind of a buy the rumor, sell the news. It was sell the ruse. It was sell the rumor, buy the news is what it what it ended up being. And so I think that they did have a reaction, but it was immediately met with buying pressure. So in this situation, you see, there's much more of an apex here than there was kind of a bell-shaped sideways triangle. Trying to get out of debt the past couple of years and been trying to learn stocks and stop my 401k. Okay, what you got, Rob? You shorting Tesla, Ellie? How's it doing? It's stalling out a little bit. How you doing, Ethan? He's watching? Okay. Ellie says hello. It's time you're fine being wrong. All right, well, just know you stop. Match.com on earnings. Nice bull flag. So far, selling off a little bit this morning, but hopefully we can maintain the lows here. Started my Roth. I put crypto to the side. Should I keep focusing on getting out of debt or take a little and get into crypto? I guess my question is, will it be too late to enter in a couple of years? Um, it may be, Rob. I don't know about too late though. I'm not sure about that's a tough one to argue years out. The thing about Bitcoin right now, um, if you're interested, what you can do is this, Rob. Take part of your Roth and get in GBTC, which is actually a Bitcoin derivative on just is a normal ETF essentially. And you can get some GBTC as a part of your Roth if you're interested in cryptocurrency. But if you're going to focus on other things and not really focus on trading Bitcoin, but would much rather have a longer term investment, because again, will very, very likely have another large pop. You could probably do it in your Roth. And the good thing, unless you wanted to use that money for some other shorter term thing, but probably what I would do is put money in your Roth, put some part of it in GBTC, and then save cash. Whatever you're going to put in crypto, save that as cash, and then use that for whatever ancillary purposes. I think that's how I probably would approach that. But I think getting out of debt's extraordinarily important. Um, yeah, like I don't have any consumer debt. I got no car debt, and the only debt I have is my house, and it's on a 10-year loan right now. So it's going to be paid off in 10 years, probably less, actually. So I think getting out of debt, from a personal standpoint, is very important. Investing is important as well. Um, but yeah, I think that's how I would handle it. I'd put some of my Roth into GBTC, probably. And if you're interested in some of those other alternative cryptocurrencies, they do have uh, it's not GBTC, it's like ETH something. We looked at it a while ago. The guys that do GBTC have a couple of different ones, and so they got one for Ethereum, um, and I think you can see some really good runs in some of the top cryptocurrencies. Yeah, so good job getting out of debt, man. Keep piling that money in, and then yeah, before you know it, I don't know. With I pretty much only have my mortgage in terms of my debt. It's my largest bill, obviously, and there's just I can't explain it. It's been a while for me now, and I never was really truly in massive debt. But every time I had a big car payment, every time I had credit card payments, it just feels like a big juggling act. And now I don't even think about my personal finances really. I just it just happens. Yeah, and I think if you're interested in crypto, you don't have to trade on individual exchanges if you don't want to. I really think GBTC in your Roth is a pretty decent idea. Um, yeah, it's just we haven't really been talking about it, unfortunately. Yeah, I should have bought should have bought in a little bit lower in my Roth. I actually hadn't. I have to find an entry point into my Roth. Maybe I'll just start doing little buys in my Roth. That would probably be a good thing. Yeah, won't be too bad. Debt is psychological. I'm not sure how it works for you, Rob, but if debt forcing you to always feel pressed to get gains, it may be detrimental to your trading. Yeah, I don't know. I just don't want to have it. I haven't had credit card debt in, I don't know, 10 years, maybe more. Like I used to have credit card debt like every other normal individual, but much happier without it than with it. It's not a concern. Don't have too many concerns. Has GBTC been following BTC though? I mean, after the big rise, yeah, it's been doing pretty good. You got down here from what is this, 5 up to 10.5. It, Rob, it does good enough. And by having it in a Roth IRA, it's tax free. Let's say this thing does rally and goes up to 100 from here. Not, I don't know if it will. That's pretty exaggerated, but let's say this does go up to 100 from 10. That's a nice 10x tax free in your Roth that you could maybe roll into something else or just sit on cash for a while. But it does good enough. If you're wanting to put cash into cryptocurrency on an exchange, that's fine too. Um, it's just an idea, you know. In terms of personal finances, if you think of, I think of, I apparently really like buckets a lot because I think of everything in buckets. So if you take your 401k bucket or your Roth bucket, whichever one, obviously for well, you got a 401k bucket, which you probably should roll over into something you can control more fully and get rid of your 401k because they don't match, then you can control it completely and just roll the TQQQ strategy on that account. And then you can take your Roth and do general trading and maybe have some BTC HODL. Um, and then you can take your actual cash outside of your retirement and just get out of debt. Or you can roll the Dave Ramsey strategy and pile every amount of cash you have into debt, get out of it, and then, pile every amount of cash you have into investing. The boat. Nice. And the solar panels. That's cool. Okay, so yes, looks like you got a house, Rob. Yeah, you definitely have to account for taxes if you're gonna if it, well, I mentioned rolling over. I wasn't thinking specifically into a Roth. You can go from a 401k into a traditional IRA without any tax effects. But yeah, Ellie's right. If you do go into a Roth, you'll have to pay taxes, and you can make that decision if it's up to you or not. Um, I really like Dave Ramsey's plan. It's kind of like a safety net. I don't completely follow it either because obviously I'm a little bit more um, aggressive with my investing strategy. He just says go to mutual funds. But keep in mind, most of his listeners aren't interested in financial markets in the same way that we are. So obviously, I think that's going to work for a good majority of his listeners. But for those a little bit more in tune to the financial markets and don't mind doing some individual investing, we can supercharge all this stuff. Yeah, I agree with not doing mutual funds. But look, I mean, Dave Ramsey's strategy is, if you're not out of debt, number one, well, you can move that to a traditional IRA, Rob, without any tax liability. So I wouldn't be super scared about moving it. Just call call up some people and ask some questions. It doesn't hurt to ask. Maybe I'm wrong and there will be some tax liability. Again, that's where questions come into play. Yeah, so I mean, you got 65K. If you wanted to, Rob, what you could do is what 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 you could do is this is you could take that money out of your 401k and start backdooring it into a Roth IRA, and then you can pay your taxes on that. Um, and then maybe you don't do any additional investing because one thing I'm not sure about is if you backdoor into a Roth IRA, if that counts as your contributions for the year or not. So I believe contributions are $6,000 right now. So I'm not sure if you can backdoor 6,000 in from your 401k and then have no cash contributions if that basically maxes out your contribution limit. You'll have to ask a tax expert on that. I'm not 100% sure. Yeah, but yeah, don't make assumptions. It's big boy decision time, right? So it's fine if you make the conscious decision to leave it in your 401k, no problems with that as long as you're, informed of all your options. But yeah, like Ellie said, call the broker and you may be able to even open an individual account with that broker if that's something that you want to do. But Bank account, traditional, next year Roth. Don't you pay taxes on the bank account part of it? Oh, that's just over the income limit. That's not referring to rollovers or backdoor rollovers. Yeah. Anyway, there's a couple options there, Rob. Just mull it over. I think it's awesome. You're out of debt. I, it's up to you, but I mean, interest rates are still pretty low, so you could probably even think about refinancing your house and trying to pay off some of that solar debt. Um, Not that it would pay it off; it would roll it into your mortgage, but depending on the terms of your loan, that could be a good thing. Run the numbers, see how it works out. But yeah, I think at the end of the day, your general goal is to get everything into a Roth IRA and to be out of debt and just start stacking cash, paying off stuff, and all that. Buy BTC. Buy BTC. Yeah, I found out yesterday my solar had stopped producing power to the grid for the past 5 days, so I've been paying normal power crap for 5 days now. It's kind of annoying. It's really annoying, actually. Yeah, the way I generally view about, and I've actually, how I got involved in investing was at a pretty young age. I turned on CNBC and kind of figured out what the tickers meant and was hooked ever since. And then I thought to myself, if I could just be knowledgeable and good with money, then I pretty much won't have any issues in my life and I'll have a lot more freedom. And it's turned out that way, in all honesty. I'm 40 years old now, no debt but the house. What, Ethan? You're 31? Oh, okay. My son's 31 apparently. Yeah, I mean, no debt but the house. Pretty free. I mean, without a $500 or $600 car payment, and love it. Sun stopped shining in Arizona. No, my stupid inverter, something happened to it on apparently overnight, Sunday to Monday, and I haven't been making any power money since, well, I guess it was Friday first. Yeah, it's like 4 or 5 days now, so it's gonna suck. Yeah, Ethan, Ellie's right. Not having a job at 31 is not a good sign. So you better go out there and get a job. Why no? Why no? Huh? You can't afford anything if you don't have a job. What? 60 billion money. 60 million money? Yeah. What does that even mean? What kind of money? Monopoly money? No. You've got Monopoly money? Yeah, you've got Monopoly money. We haven't played Monopoly yet. Oh, he wouldn't like that. But I play Monopoly at school. Oh, microinverters? Yeah, I don't have microinverters. They have what's called power optimizers or some garbage like that. Yeah, I didn't plan on my whole thing going out at the same time. That's kind of annoying. You're living at home, Robert? Oh, he's living at home? Yeah. Yeah, also living at home at 31 is not a good thing either. Oh my dude, Ethan's right, guys. I'm living at home and I'm 41. Oh gosh. He's right. I never thought of it that way. I'm a loser. Ethan, I'm a loser. I'm living at home at 41. I'm not? Thanks for making me feel better. It's table's turn, not turntables. That's what DJs use. How turntables? There you go. All right, Nasdaq 0.27%. Come off the highs. Looks like Ellie's short is working out for him, which means I'm going broke. So I'm gonna have to live in Ellie's house pretty soon. All right, so see what's going on. Soxol popped up, coming back down. Looks so far looking like a carbon copy of yesterday. We'll see how that one plays out. Quite a bit more red on the screen here. INMD, Manitowoc, UAL, Sky L, Sky West. Sweet. You can fit all four of us in there, right? That should work. Sell everything if confirmed Head and Shoulders. I don't know, Rob. I don't know on that one. I guess you could if you want to. I'm not sure about that. It's an interesting one. I mean, there's a lot of people still kind of uber bearish because the general, economy's still closed, but we're starting to open back up. Arizona's going to open on Monday, so you'll start to see some things, you know, some things kind of peak, come back up, and I think that'll be good for a lot. Obviously, the market's already come back significantly, so they're already pricing in actually things reopening likely. Um, Yeah, so I guess we'll just have to see about what sales numbers look like after the first week in certain markets. And that's probably what the different hedge funds and institutions would be looking at is sales in individual markets, as they probably have ways to get that information. Yeah, Ellie's got a good point actually. If you are planning on selling when it gets down here, sell a little bit up here because it's not that it's a big write down, but let's say you got a TQQQ position up here, you're going to be down 7.5%. So if that's something that you are going to do, you could sell partial profits, maybe take 25% off the table up here, and then you may start to kind of layer down if it goes lower. But yeah, we'll see how this little. It's a mini Head and Shoulders, mind you. It's a mini guy. Doesn't mean it's going to work out. It's just a pattern potentially in play right now. I'm not sold one way or the other on it, to be honest with you. I think chopping from here is most likely where we go. I think more sideways. Like I said, I think it's weird if we go back into all-time highs so soon. Maybe later this year, early next year. So we could just have a lot of chop. We've come a very long way from the bottom in a short period of time. And I don't know, it would just feel weird if we just kind of melted up back up into 10K on the NASDAQ. It just seems strange. Well, not really. It's kind of a cross between a V and a U. I mean, we didn't spend a lot of time at the lows, but a V would be right back here if you just draw a straight V. So we're kind of in between that, which is fine. You can argue it's a bit more of a measured buyback, but again, if you look at the Nasdaq, what's it comprised of, and how are those going to handle that? We talked a little bit about this yesterday. Apple, Amazon, all the big stocks that comprise the Nasdaq buoy the Nasdaq like nobody's business. You can talk about the general stock market, the general economy. I don't know what segment. So let's do this. Actually, I didn't think about doing this, but this is actually a brilliant idea. And another one. Nasdaq by sector. What about net? Nasdaq smart sectors? What's this? New. I don't want your smart sectors. I just want your sectors. What do you comprise of? Because see, how much of the Nasdaq is retail? You talk about retail. I'm talking about the Nasdaq. We could be talking about two completely different things. Okay, maybe Nasdaq weighting. Here we go. Top 100 Nasdaq components. Tech, 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 tech. Sugar. Tech, tech, tech. Cable. Tech. You can argue about what that is. Biotech. Retail. Your first big retail is ranked 17th on the Nasdaq. And I'm assuming this is by market cap weighting. I'm not. Largest to smallest. I'm thinking it's by. So Gilead, Starbucks. I don't even know what that is, but apparently it's a very big company. Intuit, Vertex, Regeneron. Uh, I, I'm not seeing any like Autodesk, Analog Devices. Walgreens, but they've been open the whole time, so that shouldn't affect anything. I don't know what your argument means there. What is your point? They're still number three. They're still not going down, and you own them. So I don't talk bad about Amazon, Ellie. It's bad karma. You're gonna retire on a Greek island one day because of your Amazon holdings. CSX trains. I mean, I don't see Kraft Heinz, but those are flying out. Everyone's buying ton. I have like five things of ketchup right now for some stupid reason. It was like the only thing left in the grocery store, so I bought a couple of them. Monster Beverages, Ross stores. See, that could be hit. Number 52. So now we start to get into things that could likely be hit. Like I don't know what's going to be hit by this. Um, Apple maybe hit a little bit, but they're already on their way back up. PepsiCo, I don't know. They're still sucking their soda. Yeah, there you go, Rob. Put your LK money to BTC. Costco's hitting it out the park. They're selling a bunch of stuff. I don't. It's probably not a boom for them. They probably have a few more costs associated with stuff, but not bad. Um, but I mean, we mentioned Starbucks. They're doing drive-throughs, so their sales are probably muted, but okay. They got good margins, right? I can't imagine Starbucks margins are bad. Definitely have a monopoly on the coffee market. Not a literal monopoly, but you know what I mean. They're a brand name, they're a household name. Again, Walgreens, they've been alive the entire time. There's one down the street from my house that I've been going to. One of the few things open that has a lot of stuff. Kraft, not a retail store manufacturer. Ross is really the first like brick and mortar retailer on here at 52. O'Reilly Auto Parts maybe be suffering a little bit. Marriott, obviously they're suffering a lot, but they're number 58. So you're in the bottom half of the top 100 of the NASDAQ components before you start to see anything that's probably really going to suffer by a slow reopening. Everything else should be back to business as usual, if not close. Yeah, there's that too, Rob. Some of these I don't know what they are. Like I don't know what this is. There's a few others that I don't know what they are, but I highly doubt they're large retailers. Cintas may be suffering. They are a work clothing company. One of my work paid me to wear some Cintas clothing, just work uniforms for blue collar people. That's probably suffering a little bit right now. But in Arizona, a lot of those were deemed essential, and so they're still in business. So that won't be dying. So I mean, when you're talking about the Nasdaq, which I am, um, I don't see a whole lot of reason here to be super bearish. Dollar Tree, they're still open. I was actually in one yesterday getting, or 2 days ago, getting the kids some treats. Um, there's like four or five things so about 5% of the top 100 on the Nasdaq are likely to be potentially hit decently by this, which is a reason why the Nasdaq is uh, is up here, and I don't see any major reason for it to go super higher or super lower at this stage of the game. In my personal opinion. Now, especially the Nasdaq. If you want to talk about the SPY S&P 500, they're going to have a they're going to have a bit of a broader. You see the difference here. We don't really look at the SPY that often. I stare at the Nasdaq, but the SPY is only at 50% of its range. If you look at the Nasdaq, there's 50% of its range. We're up here towards 70%, 70 to 75% of our range. So the S&P lagging behind by a long shot. Um, Nasdaq is like the new Dow Jones. Just no one knows it. It's been that way for 10 years. Just no one's really thought about it. Still, every day on the radio, I hear about the Dow and the S&P. No one talks about the Nasdaq. It's the new economy. It's the new economy. Anyway, So yeah, could we have a little pullback here? Could we go range bound? I think a range is reasonable. I'm just guessing here, but throw a range up, maybe a spike below it on a scary day or something like that. But we could throw in a range here if you want to trade a range. I'm not super mad at it. Not that this range has happened yet, but I think you get the general point. So that's kind of my thoughts on the market right now in terms of the general outlook and coronavirus and stuff. Um, yeah, I think we're just going to kind of slowly meander out of this thing. It will be slower, won't be less of a V-shaped economic recovery, but the stock market always looks for an edge. So as long as they see light at the end of the tunnel, and then as you can see, the buying pressure has been here. Picard owns Kenworth and Peterbilt. Oh, okay, gotcha. Well, Tesla's a year from putting them out of business. Not exactly, but you know what I'm saying. Beyond Meat, 18%. Extending from here, ladies and gentlemen. Up. Looks like upward and onward we go with Beyond Meat. All right. Man, my should have bought that option yesterday I was thinking about. That would have worked out pretty well. What was I? I was looking at these. I was looking at these right here. Let's see what our percentage would have been. uh, yep, that'd have been a lot. 150%. That'd have been pretty good on an earnings play. I think everyone's expecting bad earnings. So we're seeing a lot of moves up on earnings, like a lot of moves up on earnings, and people aren't expecting it. Everyone thinks earnings are going to suck, which is why I think you're seeing moves up. Yeah, I always find that funny. They put the price target well below the current price. All right, Soxel. All right, so far trying to hold itself up. We'll see how that goes. Didn't go so well yesterday. Sold off. We had a pretty decent sell off at the end of the day yesterday. I definitely think there are some selling pressures up here. I think we're at the point where the easy money's gone, the easy positions are gone, and you're getting in a more difficult trading environment. So they're probably eliminating some of those early gains, which are likely substantial, very substantial gains from the lows. And I think that's what you're seeing a little bit up here in these. Probably get a third bout of distribution, maybe play with that head and shoulders pattern. Melly stalling came back down to the opens at the opening price and bounced off that a little bit. So Mercado Libre. Torbjorn taking gains in long-term holdings right now. Well, do you have any signals to get you out, Rob, or are you just going by feel? You need to find some kind of a mechanism to get you out of the market other than just go by feel, because that will lead to um, that'll lead to some over trading. At least if you're signal based, what you'll end up with is not the worst fill, not the best fill, but a logical fill. No, don't do that. Don't let your heart guide you while investing. My goodness, man. Fill your heart with TQQQ. DocuSign, all-time highs. Man, go DocuSign. Psh. See, See, this is what institutions do right here. They buy it down here at the bottom because they have massive deep pockets, and then they just let it rise up, and they slowly stop buying it on the way up, and or it takes less money to support their position. Support here at the 10-day moving average, DocuSign extending up, so pullbacks to the 10-day should be bought on DocuSign. Atlassian yesterday, really good day, did take some gains off. paired some gains late yesterday. It looks like nothing too aggressive, but definitely was some selling pressure, some profits being taken off the table. But Atlassian on the weekly chart, it's just looks like it's going to see 200 plus here this year. Easy, easy. Domino's Pizza also extending into all-time highs here this year. And so far looking pretty good. This looks like a pretty weird cup and handle here. But definitely looks like it could try to get going. Um, could be considered a base on base, although we haven't based on the second base yet. The first would just be a cup base. And yeah, interesting for Domino's Pizza there. PayPal actually took a very small trade on PayPal yesterday. They have earnings coming up, and I was thinking about buying them up here, and the market started selling off. So I'm like, okay, we're rolling over, broke our trend line, and then I ended up buying down here somewhere. So I'm up a little bit in that trade. Um, Another little gamble for 500 bucks. This time, if I have extraordinary profits, I'm just gonna take it. I'm not gonna wait for the whole thing. The UAL trade would have been really nice to bank that. DPZ, well, are they under normal or above normal right now, Rob? I don't know. I'm not sure what their sales are. And Sox are number three on our list, trying to get back at it today. Atlassian or Salesforce? Um, I don't look a lot at Salesforce, not for any specific reason. I would choose Atlassian for sure. It's already in all-time highs, so no resistance on the way up. Atlassian is already fairly extended though. That's the thing. Um, yeah, it's already up 11%. Your good trigger pulling day was probably yesterday. I think it was yesterday or the day before on earnings. Oh, it was a couple days ago. So your good trigger pull day was 2 days ago on Atlassian. But I'd much rather take a stock in a new highs than a stock that's beaten down. So if you're going to buy one today, I would probably still buy Atlassian. Let's look at Salesforce though. Haven't really looked at this in a while. So they're still stuck down here. Definitely a laggard in the space. You could argue both of them are probably equally important in what they do. I'm not sure why CRM hasn't come back that much yet, but pretty good volume on the way up. It's going to have its day. It's just not today. Beyond Meat, almost 20% now. There you go. Bam. Broken the long-term trend right now, even on the weekly. I'm not sure we go back to 250, but we'll see. We shall see. We shall see. And Soxel coming back. Very strong. Still quite a ways to go on Soxel. Um, Back to all-time highs. We're still looking at about 157% on Soxel, so there's definitely still a nice percentage gain there. It took a huge beating, and you can see this last time when it took a big beating, it came back pretty quickly. This one isn't as bullish as that reversal back to the upside, obviously, but I think it's still likely to do some good things. Soxel being a ETF for chip makers. And if we look at actually a lot of the chip makers are doing very good. Nvidia right back up to all-time highs. AMD playing with all-time highs. Looks like a cup and handle pattern right now, actually. So 36% deep cup, that's actually great. AMD actually looks really good right here. Wow. Pull back to the 50-day moving average. Here's your handle in a cup and handle pattern. This is really nice. Actually, I would pull triggers on this before almost anything else right now. This is a fully fledged cup and handle pattern. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12 weeks long, which is perfect. Good deep base, about 38%. Keep in mind we just came out of a bear market, so 33% can be extended to 1.5% of the market decline, which this is well within that. Our volume on the daily chart is really nice down here. Supportive. Let's do a day count. I don't do day counts very often because our charts recently have kind of sucked. Well, I'm gonna have to raise cash to buy this position. So let's do a day count here. So we're gonna start with a -1, -2, -3, I may, Rob. That's not even a +1. That may not even be a +1. I don't know, maybe it's higher volume, but -4. I'm just doing this quickly in my head. -3, -4, -5, -4, -3, -2, -1, -2, -3. So we're -3 on a day count, which isn't very good. So not the greatest on the day count. Not that it's the end of the world either. Also an inverted head and shoulders here. Shoulder, head, shoulder, neckline. Buy point here off of the 50-day break. And now actually what we have here, ooh, which is really nice too. I don't know, I'm gonna have to give this one some thought. I really like this. So you get the 10-day moving average, the 50-day moving average, and the 200-day moving average all diverged. And once we start to see them accelerate to the upward, you're now in another large, very large uptrend. You're in another one of these. So good possibility AMD goes into, and AMD's killing it. Good possibility we go into another very large uptrend on AMD. Here, here, here. Oh yeah, good look. Maybe. Yeah. Yeah, not too bad. No, it's not a double top, it's a cup and handle. Double tops, yeah, they're a little bit different. Usually a shorter term time frame, but that would be your neckline. Look at that, right off the 200 day. They didn't even bother fudding around with it. They just let it. They just bought it. So an implied target of about 80 from here. Well, keep in mind it's got to break out first, right? So any thanks for keeping it bearish in here, Ellie. Appreciate it. Now, I would view that as a cup and handle. You could take it as an inverted head and shoulders, which IBD does not have an inverted head and shoulders. That's not an IBD thing. Cup and handle is, however, and this one looks fairly textbook. Could have a little bit more bullish in terms of the day count that I just did, but so like I said, a loose target about 80 on that. I'm not quite sure when it gets there though. I mean, should be easily manageable by the end of the year. So we ended up with this type of channel here. They say they like less than 12%. So that move, if this breaks out, this is a lot of ifs right now. Keep in mind, this is not broken out. This is just a possibility that's on the chart. Um, yeah, it's not a deal breaker. It's okay. So the gist is this: the middle of the handle should be above the middle of the cup, which it firmly is. I'm not going to let a couple of little things, get in the way of that. Um, so that you could easily get this out till, the gains are okay. Okay, hold on a second now. Let me get my actual thing. I could be wrong on the 12%. These cool little books here that IBD put out a while ago, and I've saved them because they were super cool. How to recognize your guide to spot the cup and handle chart pattern. These are great little guides, by the way. I've never seen them before or since. I don't know if they were a thing, but so Walmart, Apple with a cup and handle, Redmond, Baidu, Priceline, Southwest Energy. Yeah, these are cool little books, man. Qualcomm cup and handle. Downward line along top shows possible early entry point. Oh, this one. Okay, cup with handle traits. The handle lasts 1 week or more and drifts downward 8 to 12%. Its lows, but as much as 20 to 30% in bear markets. Volume may dry up in low handle of the area. So it is 8 to 12%. So this one is a little bit low. Um, the stock usually corrects 20 to 30% from the peak left side of the cup, but can be as deep as 50% in a bear market. This one is 38. Obviously, 7 weeks, which we know we're older than that. At least a 1 week handle, which we know we've got that as well. And so the um, depth would be a minor issue, but I mean, from 12 to 15% isn't, in my opinion, is not the end of the world. We did support the 50-day moving average, which is probably more important. So they have a bunch of little charts here, but they don't give all those percentages and stuff. They just say cup and handle. So I don't know if it is 12% deep or not. And you can argue we have not been in a bear market while that handle is formed. So yeah, the handle's not super tight, but yeah, a little bit of distribution in the handle. So that would be a flaw. So okay, so AMD with a flaw in the chart. If that's a deal breaker for you, that's okay. It's not. I don't think it's necessarily a huge deal breaker for me, to be honest with you. Not. Yeah, it's not the end of the world. I mean, we can quibble over 3%, but at the end of the day, it's not like we crashed down, all the way down here and then came back up. But one flaw would be the depth of the handle at 15%, meaning it's not as tight. I would say another flaw. Um, well, I still like Soxel. Soxel has as much of a gain just on the stock side. Well, this has more of a gain on the option side, but that's a very aggressive option. I don't know if I want to. I'm not even sure if I like the options play, to be honest with you. It's not that it's good. You go about 170%. That's still pretty good, but that's from here. You'd have to buy here. You buy at this breakout point, that option is going to be 50%. So you'd have to buy it early, basically today, and then hope it gets to 80 by this one says the end of the year. 80 by the end of the year. With break evens in the 62s, which aren't too bad. Our highs at 59. Ah, but yeah, this is definitely. I would like to see a little bit less red volume here. That's true. That's true. Yeah, Intel is not doing very good. I think we looked at the components of the Soxel. You know what? Actually, I want to save this one. Index components. There we go. Yeah, but AMD's got the Ryzen processor, which and that's how they're eating Intel's lunch. So at least that's how I'm looking at it, I guess. Oh, it's a three times bull ETF. Okay. So they're mainly comprised. Nvidia, their biggest one. Intel is right there at 8%. Texas, Qualcomm, Broadcom. AMD is only 5%, so they're going to be underperforming due to their underexposure in AMD, likely. Taiwan Semiconductor, Lam, Micron. So that's 19, 27, 35, and then 41, 42, 46. So 50% is Taiwan, AMD, Broadcom, Qualcomm, TI, Intel, and Nvidia. Let me bring this over here and let's go look at those charts real quick. Oh, that Zotis, yeah, ZT, is that ZTS? Let's see how that's doing today. That's not it. Oh, it is ETS? Am I thinking of the wrong one? That's not, what's that? Oh, that, no, that is the right one. That's the one we were looking at. I actually emailed Chris Gessel about this, and apparently yeah, this is, it says 61%, but that's not correct. It's actually 30 something percent. See, it keeps telling me 62%. That's actually wrong. That math is wrong. It's 37%. And he said it's good for what it is. I still don't like the chart pattern very much, but I like this tight action on the right side here. All right, so let's take a look. Nvidia, these are the top of the Soxel. Nvidia pretty much knocking at all-time highs. Intel, right up there too. Okay, I was expecting them to be a little bit different, but Intel looks like they're still doing fine. Texas Instruments, I forget their symbol. Oh, TXN. There you go. Texas Instruments still fighting around a higher area, not really coming back substantially well, but doing all right. All right, so there's TXN. Next one up is Qualcomm. Yeah, Qualcomm. I don't know why so heavily in Qualcomm. Maybe they make Apple parts or something, but they're definitely not doing as good as could be done. Broadcom, Bcom. I don't think that's right. Is it AVGO? Oh, it is AVGO. AVGO in a beautiful uptrend. Um, Longer term on the weekly chart. Not bad, kind of mirroring the Nasdaq right now, as a matter of fact. Boeing shares mess up your 99 entry that looks so good on your thing. I would hold for right now. It doesn't. There's. I mean, it. There's nothing that's too great on this chart. It is still beaten up. It's still Boeing. I mean, it's a quality company, but with the airlines still beaten up, they're not buying any planes. So I would just, if you want to buy more Boeing, I would just wait and watch it. And if it starts getting bullish, you can do that. Hold on a sec. All right, I'm back. Um, I would argue there's probably nothing, yeah, nothing stopping Boeing from going down. It may come back towards the century mark again. Maybe it'll get a lower fill. I'm not so sure, about today though. So walk it lower. If it's still walking lower, um, just let it walk lower, and then you can try to get a lower fill. You're gonna be here anyway, so check it out. Yeah, that would have been a good trade. That'd have been a great trade. You have to reload. But I mean, Boeing, in theory, in time, I don't know when it's going to happen. If they get everything sussed out with the 737 MAX and the airlines start coming back, you could see this thing start to reverse higher dramatically. I could see that. Boeing is a very high quality company. Actually really, I have no idea what's happening with Boeing because up here on the 737 MAX news, I thought it would take more of a hit than it did, and it stayed up really, really well for a very long time. And then obviously the with the coronavirus shutting travel down, oh, Nasdaq back up to one and almost 1.3. Um, yeah, Boeing at this stage of the game, I don't know what's going on with it. I can't explain. There's some other stuff that I apparently don't know about, but yeah, I just let it. While it's going down, let it go down. Yeah, Broadcom kind of mirroring the market here a little bit, not as bullish though. Hopefully we can get back up there towards the highs. And then AMD, as we noted, with a larger chart pattern in play at this stage of the game. So that's really good. And Taiwan Semiconductor, TSM, right? That is TSM. Oh, okay. I was right. It's TSM. Um, Not horrible. Still about halfway down in the since the sell off here, about halfway down. Not too bad. And that's like the top half. They have Kia. Kia Corporation. What the heck is that? I don't know what that is. They got Micron on here too, which is beaten up a little bit right there. And then Lam Research. Not sure. LRCX, it looks like. And they're still beaten down too. So definitely some things beaten down. Intel doesn't look like it's the one um, that's doing bad. It looks like it's all of its smaller cap ones. So we'll see how it goes, though. I mean, look, to be honest with you, when you're looking at the Soxhole, and we discussed this with other 3 times ETFs, it takes it really hard on the downside, extraordinarily hard on the downside, because it's compounding those negative numbers all the way down. So if you look at like a traditional, this was down like 83%. There may be a possibility that a more traditional one would only have been down, half of that or a third of that. Um, so it's going to take a while for this to get back to highs. It's actually going to have to exceed the prior high before it actually literally gets into highs. So what's a semiconductor ETF? SMH. So there's a traditional semiconductor ETF, and you can see on the downside here, only down about 37%, where the other one was like 90 something percent. Um, yeah, so that kind of, illustrates my point there a little bit. And you can see we're already pretty close back to that little first bear flag right there. We're pretty close to that. So um, even as this gets up towards the highs here, the Soxhole will probably likely still be down here at about the 175 or something. It's going to take a while for this to get back to highs on a 3x ETF though. So, all right, guys, I think I'm going to get out of here for the day. Market's going bullish, which is nice. And we'll see what happens at the end of the day here. The end of the day yesterday started selling off in the last 10 minutes or so. So, we'll kind of see how that goes. But yeah, all in all, I think pretty good here. We have Beyond Meat, looks like stalling at 20%. Melly, not really taking off very far, but Soxhole doing good. And Match.com, yeah, coming back. I kind of that's an interesting one out of a bull flag. This could be a buying opportunity on Match, not too far out of its base, as a matter of fact. You're only a few percent out if you take the actual buy pump, which would be the high right there. So not doing too bad overall. And then yeah, if the Nasdaq keeps going up, this Head and Shoulders is going to evaporate extraordinarily quickly. Don't let that scare you. Just pointing things out and just taking notice, essentially. PayPal 2.2%. That's good. Good, good, good. All right, guys. Well, I'm going to get out of here for the day. I will see you tomorrow. Stay safe out there. And don't be shorting too much because you're not that smart. Okay. I'll see you guys later. Bye.